Good morning, everyone, and welcome to TN Talks. Today, I am Alicia Green, your host with IPSBVI for Integral Professional Services. And with me, I have two experts who I will introduce just a little later. But IPS, as you know, is a consulting company in the BVI that offers IT solutions, financial services solutions. We also have admin support, accounting, and a slew of auxiliary services that builds on our solutions for our clients. Today, we have two experts with us from REGNOLOGY. I will start by saying thank you for joining us as we discuss tax transparency and crypto asset reporting. And just a little introduction to what you're going to be listening to. The history, as you know, of global tax transparency schemes is long, and tax transparency has finally become a global reality. Since the turn of the century, numerous tax initiatives and tax amnesties have been released, and new regulations are about to come. Financial institutions of any kind, be it a large international bank, private banks, online brokers, or cryptocurrency exchanges, all stakeholders globally have to comply with a variety of tax regulations. The institutions need to report data according to CRS, Fatca, DAC 6, and QI regimes on one hand. On the other hand, they need to provide their end clients with tax reports for their individual tax filings in their respective home countries. So in the upcoming 40 minutes, we would like to dive into all those topics around global tax transparency, where you will talk about what are the recent tax regulatory initiatives, the challenges for financial institutions, and some approaches to best manage multiple tax regimes. There you go. So in this TN Talks, ladies and gentlemen, we've partnered with REGNOLOGY, one of the leading providers of RegTech, SupTech, and tax reporting software and services. So with me is David Mesa, Senior Sales for Tax Solutions for Southern Europe, Americas. He will do a short introduction about REGNOLOGY and their expertise. Then I'm going to be speaking up close and personal with Remi Grossmann, who is a Senior Product Manager at REGNOLOGY. They will have an opportunity to tell you a bit about themselves when it's their turn. And right now, we're going to turn our attention to David. Hi, David. How are you?
Hey, Alicia, how are you? Thanks
Good.
for the invitation. To most of you, the name REGNOLOGY does perhaps not ring a bell. And the reason behind that is because it's a new name. Basically last year, Nordic Capital acquired a couple of companies that have been in the market of RegTech solutions for a long time. One being, and this perhaps is a very well-known name for you, Visor, which is the software used by many tax authorities and central banks in different parts of the world, BVI, Jamaica, Bermuda, Bahamas, St. Lucia, Belize, Panama. They all use Visor. And it was acquired by us, as well as a company in Germany called Bearing Point that has over 25 years of experience in developing solutions for regulatory reporting and tax reporting, mainly FATCA and CRS, QI, DAC 6, trades, etc. So the purpose of this merger between these companies and the growth we are increase that is being planned for the company is basically to offer or to have a very competitive and complete offer for connecting regulators with financial institutions of all sorts around the world. This is, of course, a way for us to promote tax transparency while helping financial institutions and regulators to be more efficient and achieve a more stable and sustainable financial world for our future. So as said before, we have solutions for financial institutions. Basically, and of course, we're not going to talk about this today. We're basically gonna focus on certain aspects of the regulatory environment that affect financial institutions and regulators alike. But just to give you a brief introduction, we have solutions or RegTech solutions for financial institutions, SupTech solutions for the financial market regulators, and as I said before, tax reporting and AOI for both financial institutions and tax authorities. We serve 19 tax authorities around the world. Of course, I believe that everyone here is located in the Caribbean. So Antigua and Bermuda, Bahamas, BVI, Jamaica, St. Kitts and Nevis, St. Lucia, Guyana, Panama, and Belize are part of our clientele. We currently serve 3,200 plus reporting entities, and directly and indirectly over 13,000 firms around the world. No names: Bank de Luxembourg, BNP Paribas, Casey, eToro. So we have, a full spectrum of clients around the world using our tax solutions. In our ideal world, we would be serving every tax authority, regulator, and financial institution in the world with our solutions to, as I said before, help them comply with tax regulations, become transparent, and of course, or help, with becoming the world a more transparent place in terms of taxes, and of course, being very efficient and precise when reporting. We have some solutions that, of course, you guys are invited to check in with us and schedule, separate calls if you want to know how FITax, which is our modular multi-jurisdictional CRS Fatca, QI, QDD, Trace, X6 platform can help you assess and report for over 100 jurisdictions. We can definitely set up a meeting for that. If you're interested in knowing how, EasyTax, which is our solution for offshore, onshore client tax reporting, that is very popular in private banking, but is now also being adopted by crypto and digital asset exchanges, can help you or can help your clients actually with simulating and generating tax reports for currently cover over 30 jurisdictions. And of course, well, I'm not sure if there is any tax authority here, but and if there are, maybe you already are aware of Visor, which is our AOI solution for tax authorities to exchange FATCA and CRS information with their counterparts in other parts of the world. So basically, this is a bit of what REGNOLOGY is, of our product offering. And again, we'll be very happy to schedule a call to discuss any interest you might have in our solutions. Now, Alicia, I'll hand it over to you.
Thank you very much, David, for that summary and introduction to REGNOLOGY. And just so everyone knows, REGNOLOGY is very diverse and they're pretty huge. It's about 900 employees all over the world, ready and geared up to provide service and to assist in this area. So again, I hope everyone has their cup of tea, because it is Tea and Talks. And right now, I would like to get Remi on the screen and give him a chance to just tell us a little bit about yourself, Remi, and what you do with REGNOLOGY.
Hello, good morning, good afternoon, everyone. I'm currently the product manager for our Fatca solution at REGNOLOGY. Fatca is a reporting tool that covers the QI regime, so 1042S, 1099 reporting. We cover Fatca, CRS, some domestic reporting in some countries, and we have MDR for the mandatory disclosure rules from the OECD tool. In the EU, it's called DAX6. And I've been in the industry for 10 years, maybe just. I was lucky enough to begin when we only had QI, so I could learn one step at a time. I have thoughts for the junior people who join now in this industry, where everything is already happening, like QI, FATCA, CRS, and now crypto, and everything is changing.
Wow, that's amazing. Well, I know when we were preparing for this session, you mentioned many changes that were impacting tax reporting in the next months or years. And I think it would be valuable for the audience if you could share just a little bit about this.
Yes, indeed. So if we look at our product in REGNOLOGY FITax, we provide a reporting. So it comes like a bit after. So the institution has to collect data, implement some systems, some processes, and then the reporting will come. So it always comes a bit later. And we monitor the regulation. We cover like around 140 countries for FATCA and CRS. And we have busy years and we have more quiet years. And I would say that 2022 is a bit of a quiet year for us, right? Trace was implemented, first reporting for Finland was done in January, and not many changes this year. But what we can see with the tax authorities, the bodies, the OECD, the IRS, is that everything is now aligned for us to be very busy in the years to come. And just to mention a few examples, we expect a new QI agreement to be released this year, and that will have impact on all the QIs. We have some proposed changes in CRS that the OECD is discussing, and they want to come to a conclusion on that in October. At the same time, the OECD is willing to discuss a new crypto asset reporting framework that would create new reporting obligation around crypto assets. The EU is also, the European Union is also having something equivalent, which is called DAC8. The IRS recently introduced infrastructure bill, which also has an impact on crypto exchange. Trace, I just mentioned Trace with Finland, with the first reporting in Finland. Now Sweden just confirmed 1 or 2 weeks ago that they will also implement Trace. Belgium is considering it. So also here a new thing. And what we also see, let's see if it becomes a reality, and I still have my doubts, is that the US and Biden is considering making FATCA reciprocal, so triggering new reporting obligation for US institutions as well. So yeah, pretty busy couple of years ahead of us.
Wow. You just mentioned several transparency initiatives, right? Why do they continue to be a hot topic for the industry? And from your experience, what are the major challenges that financial institutions are currently facing?
Ultimately, I think it depends on the size, on the nature of the institution. But I think one of the problems we see with those regimes is the consistency, right? When you look at CRS, there is a common and a standard in the name. But when you look at the CRS implementation between France and India, it's just completely different, right? And when you are a multinational institution that has entities in different countries, if you're a trustee and you have trust in multiple locations, it's not so standard, and it's a real challenge not only to know what rules to implement, but then to monitor the rules in all those jurisdictions to know what is happening here and there. And then you have a team that is developing some software for you, and then this team is doing different things. 3 years down the line, there is a big change. Nobody knows how it works anymore. And so the constant changes and the diversity, I think, is a big challenge. And unfortunately, we don't see it improving. With MDR and DAC6, every country or again went rogue. And if trace is the same, it's going to be a nightmare. 3 years ago, maybe some of you, 3 weeks ago or 2 weeks ago, maybe some of you attended a conference in New York. It was a webinar. And someone asked the IRS, when are you going to publish the new QI agreement? And the IRS made a very funny answer. They said the agreement has to be enforced on 1st of January 2023. So we will publish it this year. I mean, what is that for an answer? They will publish something and then all the industry has 2 weeks to adapt. So yeah. Being able to have resources that are suddenly available when someone is publishing something is very difficult. So yeah, I would say diversity, monitoring, and timing are the key challenging in my opinion.
I can understand that. Even here for us, whenever the goalpost has moved, you only have a short space of time in which to reach whatever those requirements are. And I think BVI is doing pretty good at that. So, we're pretty good at adapting. So we'll see how it pans out when these changes do come into force. But from your perspective, though, how successful have the tax transparency initiatives been so far?
Being successful is also a concept. So how do you value, how do you evaluate if something is successful? So when you look at the number for CRS, we're, I think, speaking close or shy of 100 million accounts being exchanged. We're speaking in the tens or 12 of trillions of dollars. So I think when you look at the math, it's working well. More countries are onboarding, joining the CRS. So I think we can say it's successful. Now, is it efficient? Is it too costly for this industry or not? That's another debate. But I would say the model is working pretty well. When you look at MDR and DAC6, what I see in the industry is that there is almost no reporting, which could also mean that the initiative is successful because it pushed away the industry from some practices. They stopped doing those aggressive tax cross-border agreements. So it may be a success, right? That's the ultimate goal. And Trace, which is pretty new, the Finnish tax authorities are really very happy about the first year reporting. They mentioned that, I think if I'm not mistaken, 400,000 dividend payments were granted a reduced tax rate, so relief at source. And I think what they were very satisfied about is that it also benefited the retail investors and not only the big institutional or big corporates. And they were very happy about that for this first year. And I think that it is after this satisfaction and the fact they published about this that now Sweden also is willing to join the Trace initiative.
Sounds good. Do you have, though, any information you can share? Because for us, we do a lot of business with Latin America, the South America. You see this being the same for that region?
Yes and no. So just maybe for the audience, in case you are not familiar with Trace, Trace is similar to QI. So QI is about US source income. So we have many QI in Latin America. Trace is about currently Finnish source income, tomorrow Swedish source income. And if it will spread within the EU, because the EU is looking at that, it means that for a Latin American bank, imagine a bank in Argentina that have clients investing in the EU market, they will be willing to be part of Trace to be able to grant reduced rates to their customers. So it is about where the income is coming from. So Trace is about where the income is coming from, not where the institution is located. So it will impact the rest of the world, and it may also go beyond EU, knowing that Trace is an OECD initiative and not an EU initiative.
to the audience, you do have an opportunity to participate. If you have a question, you can always type it in the Q&A box and we will address it. And right now we do have a polling question. I'm going to pull that poll up right now, the first poll. And because my next question will dive into the challenges for financial institutions specifically. So because challenges also have a reason in processes and a technical setup. So let me ask you this first question. Here we go. You'll have a minute or two to answer. Hopefully everyone can see the poll. How satisfied are you with your current reporting system? Very satisfied, satisfied, there's room for improvement, or you're not satisfied?
I would have boldly said that I'm very satisfied with my reporting system.
Well, we have 57% saying that they're satisfied and 43% saying that there's room for improvement. Just another minute or two to get everyone to put something in. Okay, so we're going to end this poll and maybe you share the results. Everyone can see that? You can see that now, Remi, yes?
Yeah.
Okay. All right, so that's where we are with persons being satisfied with their current system. So I'm going to stop sharing this. And Remi, one of the common challenges that I know and often hear about is the collection of data. And of course, because of my IT background, a lot of the clients that we get, they always want a solution to help them to track and report on accurate data. So what are some of the strategies firms can use to address this and improve the quality and reliability of data?
I think you mentioned technology. So technology is definitely one of the options. So having a tool to assess data quality, to make sure that what you report is accurate and will not be rejected. Because that's one thing we see in industry is that you do not want to have rejection when you file with the tax authorities. And even worse, you do not want to have a partial rejection because that's even worse. You prefer everything to be rejected and you're back to square one rather than to be in a like unclear situation where two things are duplicated and you need to fix it one way or another. And technology and what we've seen also in the last years is now institutions are more open to SaaS, cloud application, which would give access even to small entities, access to state-of-the-art reporting tool or data validation tool. So that's, I think, one way to see things. Second, I think institutions should not see the reporting as a yearly process. You report once a year, yes. That does not mean you need to look at your data 1 month before the deadline. You should review on a yearly basis when you have change of circumstances, the data, so you have time to remediate data, reach out to the customer, find out what's wrong in the data, so you don't have a big back surprise when the reporting deadline comes. And I still see some of our customers really waiting to the last minute saying, oh, CRS reporting is in 1 month, I should get started. I don't think that's the proper way to move forward. And also,
I hear you on that. Definitely hear you on that.
And maybe one last point is also fix the problem at source. Because when you are in a setup like you look at your data 1 month before the deadline, you will do some small fixes here and there so the data is okay and great, you are done just before the deadline. But it would be better to have, again, a monthly data check that you can identify problems early on. When you find that the address is misspelled of a customer, you fix that in your source system, in your CRM, and not in the reporting tool, because then next year you have to start that over again. So yeah, that would be my my advice.
So the point that I want to drive home here for persons or firms with their strategies is to include spot checks year round, several times a year, so that when it comes to the reporting season, you don't have to be doing too many fixes, too many tweaks, and actually reporting bad data. Yeah. That's excellent advice. Yeah. So I'm going to pull up another poll question. Yes, you get to participate again. And this question is going to ask you, do you think about changing your reporting strategy? Here we go. Do you think about changing your reporting strategy? Having just heard about the challenges with having the results from the first poll, you know, a lot of people think about how can I enhance.
Yeah, what I see
process.
also in the industry is that many institutions see like outsourcing as a temporary solution until they are ready to take the problem into their own hands. So I'll give the problem to someone else until I'm ready. So that could be also one reason to change strategy, I guess.
Absolutely, because as again, the capabilities may not be in-house. So outsourcing is definitely an option. And IPS and Regnology, we are definitely positioned to assist with this particular service. So here we go. We have 38% saying yes, 25% no, and 38% maybe, just maybe. These are
I
the
think
results.
the maybe actually is a good answer, right? I think it's healthy to sit back, take a step back every couple of years, so 2-3 years. How am I doing things? Is it the proper way? Is it the right strategy? Should I reconsider? So yeah, maybe is always a good answer to at least
Maybes are good.
think that you could reconsider what you're doing.
Okay, here we go. So I'm going to stop sharing that. And Remi, we just heard about the recently released OECD crypto asset reporting. This framework is a part of the future and of updates for the Common Reporting Standard, CRS. What challenges do you see for the financial institutions when it comes to crypto asset reporting?
Well, here multiple things. So when I see the questions, the most challenged institution may not be the financial institution. When you're a bank and you offer some crypto trading to your customers, you are used to collect certification, you are used to report. Now the crypto exchanges that are not filing CRS and that now suddenly have to document their customers, set up processes, those will be the most challenged institution, I believe, or the most challenged companies and actors on the market. It's still early to say. Also, the final framework has not been approved, so we will see many changes. There is a feedback loop with the OECD. I think the definition will be a challenge. Am I impacted? Am I not impacted? Is what I'm doing falling within the scope of the CARF? So that will be one thing. As I said, documentation will be a real challenge, especially for a non-financial institution or the non-traditional financial institution that suddenly begin to start having to document people, knowing that those people, if they went into crypto, is because it was anonymous, decentralized, and now suddenly they have to document themselves, which is kind of counterintuitive with the concept of crypto. And what I hear also a lot with our customers is the valuation. Because currently you, Alicia, have an account in British pounds, and you have to report for whatever reason in US dollars. The exchange rate, whether I take it at 8 a.m. in the morning or at 8 p.m. in the evening, more or less it's okay, and the reporting will be accurate. If now tomorrow you have crypto assets and within 1 hour it can double or triple value and then suddenly crash again, we are not looking at exchange rate per day, but per transactions. So this volatility of the assets makes it very hard to value the portfolio, the transactions, and it creates new needs to be able to really value each transaction in the reporting currency.
I'm actually happy that we are having this discussion today, because the last couple episodes, we have been talking a lot about crypto. And so I think this level of conversation will actually make more persons comfortable getting into the crypto space. But how can country-specific tax rules in crypto reporting be handled, in your opinion?
It looked back to the CRS, because CRS was the same problem. You have a common infrastructure, a common standard published by the OECD, and then country make local implementation and will deviate or not, and sometimes deviate a lot from the standard. I think as an institution, if you are in multiple jurisdictions, you should consider, I think, having an off-the-shelf solution or a partner to monitor all those specificities for you. So that would be easier. And then if you're in a single jurisdiction, be close on the regulation. Try to lobby also the regulator that they don't go completely nuts with their implementation, because we could see many, how can I say that? When you look at the CARF, and there are also mentioned like store-specific tokens, what if a country suddenly out of nowhere say that air miles suddenly are a currency that you need to report, or like getting a bit, taking the chance with CARF to just go way beyond the initial scope and what it was thought for. And that could be a challenge. It's very early now still to say that. I hope that the OECD comes with something applicable, not too costly to implement for the affected crypto players. And yeah, we'll need to see how each country then implement that, hoping that it remains as standard as possible. But I don't have a lot of hope about this, but that would be good for the industry.
So my other question to you is then, are there new opportunities to align processes and systems for Fatca, CRS, QI, and the other initiatives?
Yeah, I think we can clearly make two buckets. One bucket with what we have, like QI, trace, like the operational tax, part of this with the similar needs about reconciliation, having your custodian, whether it's a QI or an authorized intermediary, and having a similar process, similar tools, some makes sense in my opinion. And then we have the Fatca and CRS that is also very similar in nature. We see more and more countries also joining the CRS, and for those countries, it makes sense for an institution in an affected country. Okay, now CRS is live. Maybe the right time to reconsider what I'm doing for Fatca to have a proper thing in place. So yes, I truly believe that for institution, QI trace should be tackled together, and Fatca CRS should be tackled together. And CARF would also fall into that exchange of information bucket.
Absolutely. So since the start of International Tax Transparency Initiative, have you seen an increase in awareness and the questions financial institutions, customers about the regime?
Yes and no. It's interesting when you go in a country. Let's take Malaysia, for example, very far from the Caribbean, but they, I think, signed an IGA or started negotiating an IGA 8 years ago, and the institution in Malaysia are still yet to file the first reporting for Fatca. Still nothing had been reported. So when you go to a Malaysian bank and tell them about a crypto asset from the OECD, they have the feeling, yeah, in 10 years' time, we will discuss about this. So some countries, Thailand is a bit the same, are a bit reluctant to invest too much, like get ready too early, because they believe that thing will take more time than it may take at the end. So that's one thing we see, but otherwise, I would say better awareness in the industry. And now what really kicks in is more client inquiries. We see client being contacted by their tax authorities, going back to the institution. The Irish revenue contacted me, asked me about my assets. What did you report on my name? Because you never told me anything, since it's not mandatory. So they want to know that. And also a challenge if you are in the wealth management industry and you have a wealthy, German customer, and you send him a client report and you're reporting for CRS, but the value will be different because the rules are different. And the client may struggle to say, why do you say I sold for 2 billion or 2 millions under CRS, but I only had a capital gain of 20,000? And how to reconcile those data? So tax authorities go to the customer, then the customer try to understand what happens, and the industry will have to be in a position to explain to the taxpayer why this or that amount was reported.
Understood. I was hoping that David would be able to rejoin us for this last one, but maybe you can just tell us, looking into the future, what will banks need to prepare for next when it comes to tax transparency? Do you think it would be closer to supervision by the supervisors, a higher demand for supporting documentation from the clients, or, will crypto create a big headache for the banks? What is it in your opinion?
Well, as I just mentioned, I believe that we see kind of a delay between the inception of a regulation and when the customers start to be approached by the authorities and then goes back to the institution. So when you see a new reporting regime, let's say the crypto reporting starting, get ready. Then after some time, your customer will start to contact you and say, why did you report this? Why, this is not a crypto, this does not fall in the scope, your valuation is completely wrong. So getting ready now when you report to have client inquiries later is, I think, a good approach. Being in a position when the client comes with questions to providing a report, providing information that is not a burden and a nightmare to recollect data to inform the customer. So client information, explaining consistency or inconsistencies between regimes, because the client will not understand that the same amount was not reported into two regimes. So I think that's a key. Data, I think you mentioned that at the beginning of our discussion. The better the data is structured, the better the data is organized, the readiness then is higher, whatever may come. If there is new requirement for CRS, for crypto, if you have a good CRM, if you have a proper account management system, you just pull data and then report it, because the reporting needs and the information to transmit will not go down, it will continue increasing. So if you lay down the foundation with a good data mart, tax data mart for a tax aspect, and then you just plug a reporting system on this data mart to provide whatever authorities the information that is required. That would be my advice and the way I see things in the future.
And I think it's excellent advice, especially for us where a lot of these issues are not affecting us right now, but we need to be, we should be proactive. And I think this is some good advice that you have laid on the table here for us today, because tax transparency and all these regimes can be a bit overwhelming for persons. And if they don't have the right advisor or build the right partnerships with persons in the industry or the network, it's difficult to really implement an appropriate strategy to help with this area of reporting. So I really want to thank you and David for coming in and laying this foundation, and even in some instances, giving this excellent advice that we can be proactive with, especially in the crypto space. There's a lot of talk still here about crypto, and when it comes to the reporting, I'm sure people are still a bit puzzled. Yeah. So, and I know REGNOLOGY, you guys deal with a lot of stuff, but we're always keen on learning what you, the attendees, also are interested in, because one of the things we talked about when we were planning this with REGNOLOGY is talking about ESG and regulatory reporting. A lot of people are always hearing about regulation. And then we also was discussing cost of compliance with regulatory reporting. That's another topic that we were discussing, and they deal with all of these things, and also client tax reporting. So what I'd like to do is ask you that are here, help us to determine. I'm going to put one last poll up, but we don't have any questions as yet in the question box. But on this one, tell us if you would be interested in another TN Talks with us, REGNOLOGY IPS, on one of the three topics that I just mentioned: client tax reporting, cost of compliance with regulatory reporting, and ESG in regulatory reporting. You got 100% cost of compliance. Oh, that's changing. Well, we have 86% saying that they would be interested in the cost of compliance in regulatory reporting. Compliance is also a hot topic. We did have a feature on that a few weeks ago. For anyone that's on here with us today, you can always visit our series on our YouTube page, IPSBVI. We always post them there. And you can also find excerpts on our LinkedIn page as well, IPSBVI. Again, if you would like to speak with myself or any one of these guests here today, send us an email, contact us through our website, ipsbvi.com, email info@ipsbvi.com. We would be happy to take this conversation further. I think we can end this poll now, Remi. We're still 86%. People wants to know the cost of compliance. Let me just share it with you for any opinions you may have on that poll.
I think it also goes back to one of the discussion we had a bit earlier. Is a regime successful, and how do you judge if a regime is successful? And I believe that the costs it has on industry is something you should take into account to judge a regime, and not only the value it brings to the authorities. And we see the multiplication of those regimes and those reporting obligations, and it's fair to ask yourself as an institution, how much does it cost me to be in a position to answer all those demands? So I feel I understand the worry here.
Absolutely. Well, there you have it. Another successful Tea and Talks with IPS. Remi, I want to thank you for joining me. David, if you're still around, also thank you for joining me. We can talk offline. Thank you, REGNOLOGY, for this awesome partnership. And we do look forward to speaking with some of you further to assist with your strategies, to assist with your processes, to assist with your data collection. Give us a call, send us an email. Thank you for joining us. Do enjoy the rest of your Wednesday.
Thank you, Alicia, for hosting us. Have a great day. Bye-bye.